KD for the Wealth Wells. Last week we did 112,000 in the market. The week before, 83K in the market. What will we do this week? I don't know, but you can call me Butter Baby because I'm on a roll. This is your weekly market prep for October 22, 2023. What will the week hold? Where we talk about the levels, the market moving events. We get our trade plan, our trade thesis to crush this thing. Are you ready? All right, let's get it. All right, as stated, this is our weekly market prep for October 22, 2023, the week of. Last week, we crushed it. 112K in the bank. The week before, 83K. Man, we're doing very well in the market. That's with losses, all things being calculated. Nice profits. All trades are live inside the Discord, inside the live channel. I encourage you, click the links down below. Come into the Discord. As long as you don't disrupt, as long as you behave, you'll stick around and possibly make a lot of money. All right. So how do we go about getting these numbers? How are we prepared? How do we come out of the week green? All right, let's get it. So part of that is our weekly prep. All right. So before we even get into that, I'm going to encourage you to click the links attached to the video. Come into the Discord, understand and see what everything is about. On Monday mornings at the open, I trade live for the general public for free. You want to see what I'm about? If I know what I'm talking about, when I win and when I lose, you can come on in. All right, so let's get to it. Here's our weekly prep. All right, so here's our agenda. We'll talk about last week's action. Now, I recap the week. I do a Friday recap where we talk about the trades. You see all the trades, the spreadsheet, all the cool stuff, the setups, all the things I took, the wins and the losses. You can watch this video for that if you want to check them out. All right. And we'll talk about last week's action, the news, the sentiment. Then we'll get to this week. We're going to talk about the sentiments and the levels, the plan. We'll give you all that. We'll talk about what people are saying about this community, how it's impacting them. Is it impacting them? And how they're making profits and or growing. All right. We'll talk about what do we have in our tool bag to use, the indicators that we use, and our ability to read the market effectively. We'll talk about the free training, the paid training, and we'll wrap up with our thesis and our plan of action, how we're going to use the levels, and I'll send you on your way. All right. So here are the major events for the week that gets my attention. It means I watch these events so that I can understand how to trade off of them. All right. So PMI, new home sales, GDP, durable goods, jobless claims, personal income, and outlays. That's going to be your PCE report there, and the consumer sentiment. So Monday, let's break them down. We've got Chicago Fed National Activity Index 830, PMI Composite Flash 945 on Tuesday. Wednesday, new home sales. Now, I'm going to tell you right now, I don't know what this is going to come in at, but at 8% mortgage rates, oh my goodness, man. I mean, home buyers are really just sitting put right now. There is still a supply out there, a tight supply that is for homes. So this is a really unique situation that the country is in. But the inflation rate is pushing things to the point where it is making people sit on their hands. And still you have a group of folks looking to buy. And I don't know how high this thing is going to go because really the American public isn't really getting the cue. The spending is still up in some respects as we go into the holiday season. Man, this is going to be very interesting. So I'm watching this number right here, partly because, most people know that I also am an investor in real estate. And man, oh man, this is an interesting situation. 8% mortgage rates. I'd like to see what's next. All right, we got the State Street Investors Confidence Index. This is not a market-moving event, but it's something that I'm going to watch that we'll talk about in the Discord this week. All right, Thursday. So we've got durable goods, GDP, international trade goods in advance, with jobless claims. And then Friday, personal income and outlays and consumer sentiment is going to be coming out. And that's going to really give us a little bit of a pulse of, the economy, how people are feeling as well. And that's going to play into GDP and the other numbers that's coming out, the PCE numbers and whatnot. All right. So Federal Reserve, who's bumping their gums? Nobody. I love these blackouts because we have clean. Now, don't get me wrong. I like when Fed members are on the mic. JP, it's exciting, right? You sometimes you guys want to trade the whipsaws, but I like to trade disciplined and specific with no surprises. I like to know what I'm going to get, right? And so these blackout dates for me, a lot of times are my highest earning weeks. Why? Nobody's on the mic. No wrenches. Nobody's throwing a wrench into the plan. October 21st to 31st leading up to FOMC. So we got that. That's going to be really nice. So we got a clear path to trade, but we do have something that's going to introduce mad volatility and volume into the market. All right. So here's what to watch for. Now, look, last week, and you can hold me to it. You can watch the videos. You can go back and watch them all. All right. Everything's public. When I'm right, when I'm wrong. Last week I said this could be one of our busiest of the current earnings seasons. And we took advantage of it because we understood that volume and volatility would return into the market at a high level and we would hit our targets aggressively. So we sized up and we came out last week, 110K, the week before that, 83K. And we're looking, I don't know what we're going to come out this week. We don't always come out with those numbers. So I don't want to make it seem like, oh, every week we're making that. No, we have some lower weeks where it's, 40 or lower, whatever. But when it comes to the backside of the year into these, and we're in a unique situation right now. We've got the Feds trying to tame inflation. I mean, we've got home sales, and mortgage rates, and we've got geopolitical news. We've got multiple wars. These are unprecedented times. And if you don't believe it, man, you're under a rock. So with that, we're going to see unprecedented moves in the market. We're going to see incredible moves in the market. These moves can make or break you. So you really need to know what you're doing. Tune in to see what's next. All right. So this week, big tech earnings. Markets are gearing up for a busy week of corporate earnings, and the spotlight could shine on big tech companies. So who do we have? Microsoft, Alphabet, or Google will report their earnings on Tuesday. Meta, Amazon, Wednesday, Thursday, respectively. Investors can also expect earnings from many other prominent companies, including Visa, MasterCard, Tesla, or Texas Instruments, Coca-Cola, Spotify, Snap, IBM, Boeing, etc. It's right there on your screen, Chevron. And I love how the backside of the week, we're going to look at some energy with some oil. And that's going to add some nice kick to the backside of the week. You'll see. As of Friday, 17% of the S&P companies have reported earnings for the last quarter. Of these, 73% reported EPS above consensus estimate, while 66% reported higher than expected revenue, according to the research from FactSet. On average, the S&P 500 companies are projected to post an annual earnings decline of 0.4. Now, this would mark the fourth straight quarter year-over-year earnings decline. So that's notable. Watch out for it. All right. Third quarter GDP. On Thursday, the Bureau, or the BEA, the Bureau of Economic Analysts, will issue the advance estimate for third quarter U.S. gross domestic product, a measure of the value of goods and services produced in the nation's economy. All right. So the upcoming releases is coming out for that. Now, GDP grew 2.2 and 2.1 in the first two quarters of 2023. We're looking for those numbers now. It's going to absolutely give you an indication of the growth or the health of the economy. Couple that with the PCE and inflation. Couple that with earnings reporting, and we could see our second busiest week of the earnings season. The U.S. economy remains resilient despite the Fed's attempts to, or Fed's actually raising interests and those rate hikes, which are designed to cool the economy and inflation, making borrowing more expensive. However, the American public continues to spend. Isn't that something? So Fed's preferred inflation gauge on Friday, the Bureau of Economic Analysis will release the PCE, so your personal consumption expenditures price index for September, and Fed's preferred inflation gauge. Now, PCE prices are expected to have risen 0.35 last month, according to estimates from the Cleveland Federal Reserve Bank. Core prices, which exclude volatile food and energy costs, likely to rise 0.29 from August. The core PCE price index, which the Fed officials consider the most accurate indicator of consumer prices, was likely up 3.7 from a year ago. Now, decelerating from 3.9 August and inching closer to the central bank's 2% target. Lord, hope you get there right soon enough. Otherwise, you could see mortgages above 8%. Can you believe that? My gosh. All right. So here's my thoughts. Let's track what Katie's been saying. Let's make sure this guy is not making this stuff up. So 2 weeks before last, I said volatility and volume would return after CPI coupled with earnings. This would be a big week if you trade level to level, 83K that week. The week before last, or rather 64K that week. The week before last, big moves. I said volume is here. Last week, we did a whopping 450% on Friday. We did 83K that week. Then last week, I said this could be one of our busiest of the current seasons, and we did 100K that week in the bank. Now, I don't know what we're going to do this week. all I'm saying, you can call me butter because I'm on a roll. This week, volume will have to shift with earnings. GDP and PCE on Friday will cause rebalancing in the market. So once we get to our levels, we will stay there until things shift, rebalancing, and we will have to watch bonds. No doubt about it. All right. Earnings. Okay. This is the snapshot for 30 days. It's been up here for quite some time. This is the week we're in right here, the 23rd there. Let's break it down. All right. Earnings. We have a beautiful, this looks so nice. This is the week most people wait for. Who do we have? Coca-Cola. We've got Google, Microsoft, my favorite, Visa. Oh, yes, I like Visa, reporting Tuesday. Then we've got everyone else's favorite, Boeing and Meta, reporting on Wednesday. ADP on the backside with Hilton as well. Then we've got Amazon, Intel, Ford, Capital One, and Southwest coming in on Thursday. We'll finish with big oil. That's going to make the market flip, right? Exxon, Chevron, Phillips bringing in the tail on Friday. So this should be another banger week if you play your cards right. All right. So let's talk about earnings spotlight. It's no secret. Yes, it's the big boys in the spotlight this week. Let's talk about it and see what the setup is and why I like them or what I'm going to do. All right, so here's Microsoft. Now, Microsoft kicks off a run of big tech earnings when it discloses its fiscal first quarter results after Tuesday's close. Now, analysts on average expect the company to report earnings of $2.52 per share, up 7.2% year over year. The 4.2 projected top line growth is slower than 11% year over year increase Microsoft reported in the first quarter of the fiscal 2023, as well as a 10% rise seen in the fiscal's fourth quarter. The slower rate of growth reflects headwinds in the company's Windows segment. Now, here's what's up. Analysts say Microsoft's is dealing with a marked slowdown in personal computing revenues, which reflects the incredibly challenging consumer environment. I mean, duh. You're probably sitting on your computer a little bit longer right now. Buying a new laptop and software that comes with that just is simply not a priority for many people right now. So the analysts, though, however, they say that any slack in PC sales will likely be compensated by growth in Azure. Now, Microsoft's cloud segment, analysts will be monitoring if corporations are trimming their spending on this technology. Now, if they start to trim their spending on the cloud software in the cloud and Microsoft's cloud division, you're going to see a hit, no doubt about it. Well, it depends on, no, you're going to see a hit for sure. The outlook on this side of things will be very important for gauging market sentiment. Watching for any color on the Dow's stock recently completed acquisition of the video game maker Activision Blizzard. So we'll be watching for any spike or any positive news coming out of there because of their slower PC growth. All right, let's move to Meta. Meta has put in an impressive performance on the price charts this year with shares up more than 160%. My goodness, it's probably because they took such a beating over the other previous quarters. But anyway, however, momentum stalled a bit in the third quarter with Meta stock rising just 4.6 in the 3 months ended in September 30th. So off the price charts, though, analysts are expecting the Facebook parent to post impressive growth on both its top and bottom lines when it reports third quarter earnings after Wednesday's close. All right. Meta is benefiting from improving digital ad market. All right. Ramping Reels monetization and improving artificial intelligence ad measurement. Analyst says they still give it a buy rating. However, the key driver for the Meta will be fourth quarter revenue guidance. Now, this is expected to be strong given an acceleration in e-commerce ad spend and the Reels and et cetera in the messaging. So obviously, Meta, the big driver, ad spend and their ad revenue. We'll see how they get creative with that. I think the AI attached to the ad revenue will be a big driver there. Okay. And then, of course, we bring up Amazon. Amazon reported blowout second quarter earnings in August, posting its biggest bottom line beat since Q4 2020 and disclosing double-digit revenue growth. So what's in store for Amazon as it unveils its results on Thursday after close? Well, analysts expect Amazon to report earnings of 55 cents per share, all right, on revenue. So late quarter softness in Amazon Web Services, Amazon Cloud segment, right, creates potential risk to the company. Again, cloud, just like Microsoft, right, that's going to be on all investors' mind as a revenue stream that could be impacted by these big boys. All right. However, analysts, they still remain bullish on the shares over the medium term, given the view of AWS growth. I think it's strong. It ain't going anywhere, right? and it should be bottoming, and retail margins are in the early innings of significant expansion over the next year. Coming into the holiday season, I see Amazon doing pretty well. Okay, so let's get to it. How about them levels? What do we have to look forward to? Okay, so let's get over. We're taking a look at bonds right now. We'll come back to bonds right now. Let's take a look at the futures and see where we're at with the futures. All right, so here we are with the market here. And taking a look at the market, I like my levels on the VVP indicator. I'm going to stick with those this week because the structure is there. Now, just looking at a high level, I'm going to say that we have hit some interesting points in the market, and the market will absolutely have to kind of rebalance and find. So I know there's buy volume sitting at 4,200 to 4,232 on ES, and that's going to be a trigger for me. So if we were to blow past that trigger and really hang low or a long wick down, the next trigger will be 4161 and a pop up from there. But I don't think that we get down there necessarily without a catalyst, and that would be an interesting move. If we did, then I'll give the extra levels to the backside for the backside of the week. I'll give that to the tier 3 guys, right? But right now, these are my levels. Let's turn on my actual areas of interest in addition to that in my levels here. So, everyone knows I've got an area of interest here and here. This was a glorious move Friday as we saw the break underneath there, and boy, oh boy, did we go to the bank. So here's what we're looking at. We're looking at the bottom. We're looking at this area of interest right here with the sell pressure, and we're looking at the bottom of this area here, this area of interest that I have up here at 4305 area. So I'm going to be looking over the next, I would say, overnight session. I'd like to fill this gap and hold at 4250, 4248 area, right? We start to break down, and these are my targets: 4243, 4235, 4222, right? I think that we trade in this zone until the earnings or whoever's going to pump this thing, it begins to move. Now, I think that we hold these areas and we see a touch of this 4,200 area. Personally, we break down past 4,222. I'm going to short to about that 4,200 area, 4,232 area to 4,200. If we continue to hold and fill this gap, I'm looking at this sell pressure. And if this sell volume, if this sell volume doesn't change, then we're going to see some downside. So each time that we come off of 4,260, if we come up above here, I'm going to take the move up to 4,282, 4,287 in this area here and just, play off of it. If we don't get any extra, volume shifting specifically here around that 4275, 4276, this area right here, then I see us just trading in this area, right? I see us just moving up and down here and then kind of ping ponging. All right. So what's my plan? I'll share that with you in a minute. Let's get back to the agenda. All right. So what are people saying about the Discord, my skills, the training? Well, the latest testimonial says a lot. Next Level said, this is a long overdue testimony. I could have posted one about all the free game KD provides in this Discord a long time ago, as well as the YouTube videos. You're right. I give out a lot of free game. But hey, after taking the first 2 trainings, I can tell you it's worth it. Normally, I work during trading hours, but things are slowing down, so I'm able to put into practice what I've learned. I spent several months lurking, listening. A lot of people do that. That's fine. Lurking, listening, and learning in the Discord because I work from home during the trading hours, and it didn't take long to see that KD is legit. I plan on completing all of the trainings with KD by the end of the month. All right, nice job. Middle of the next month, scheduling to permit. Before joining, I have heard about most of the fundamentals of training and terminology from watching other YouTube videos and researching, but I have not heard them explained with great detail and understanding at this level until joining. Appreciate that. The Wealth Wells. KD's levels and thesis help a lot, and although he always says not to blindly follow, now this is his words, not mine, you can make money from his call-outs with an understanding of the VVP system. I do not expect people to blindly follow. That's not what this is. However, if you do understand what you're doing, this is what Next Level says. His experience gives him a vision of what the market will do, and we get to experience that live several times a week, which is crazy value. I agree. Holding your hand, walking you through how to read the market. I am no master by any means, but even with what I have learned already, trading with peace instead of anxiety, while having a better understanding of when to enter and exit, helps tremendously. You bet it does. The progress is appreciated, and I'm just getting started, as there are more trainings to go. For those questioning whether to start or further your training, I absolutely recommend doing so because you have an opportunity to learn to get teaching at a high level from KD. This speaks to why I always talk about training, and I will always talk about training in every video. Why? Because as people come into my community, and I don't have time to answer every single question. Now, I don't know how other Discords do it. I ain't got the time. I'm trading my money. So if you want to get the goods, don't expect me to give you a paragraph while I'm trading. And don't expect me to take time away from my family at night to cater only to you. No. Take the training and then you'll get it. All these folks can't be wrong. The Wealth Wells, in the Wealth Wells, he provides on a regular basis, that skills and abilities to validate. I have those, as well as the success you can have with the VVP system. So if you're ready to put in the work and grow as a trader, then you're in the right place. I agree with you, my friend. All right. So what do we have? What have we been using? Well, you've just seen the VVP indicator in the volume profile. Let me show it to you right here. Volume profile by the Wealth Wells, level 2 like data that shifts, and I base my trading decisions on the shifts in volume here, plus the tape, plus my levels, and then my areas of interest that are created by a script that I'm using in the background, and the research and data that I pull out the market. With those two together, you are unstoppable. What free training have I provided for you here on YouTube? Watch these two videos. The number one indicator for day traders. I break down what you need, how to use it, right? You can get it, you don't, that's up to you. And then I can see the future. I show you how to use this stuff to predict the price movements in the market so that you can get a good setup and get those monster wins. Last week was an incredible week, and man, we ain't looking back. All right, so what's the trade plan? What's my plan? All right. Actually, if I see the breakdown here, sorry about that. If I see the breakdown here, I am going to take the short to this 4248 area here, just a short scalp there. But I'm going to be cautious because I believe in this area here, unless foreign markets show me otherwise, I believe we hold a little bit in this area down here as low as 4232, 4235 area, right? If we begin to break down, I have other targets there. But the idea here is to allow the market and the earnings and the data that's going to print there to tell us where it's going to go. What would make more sense if we got a long wick down here to fill this area here. We trade a little bit, and then by the morning session, we begin to break above 4260. That would tell me that we at least pull up to about that 427 something area. We trade in this range right here. So my strategy for the week and thesis is my levels here that I'm going to be watching, and then there's current data, specific data points throughout the week that I'll discuss with the private channel to help you. That's the trade plan. Now, I want to leave you with one takeaway. Bonds. All right, I said we get back to bonds, so let's go take a look at bonds right here. And bonds, man, they're pumping. Bonds was moving up to 5. My goodness. Man, over 499 up to 5. So this is incredible. Now, here's the deal. All right. As long as bonds stays up here, I would say 490, 480, but 490 to 5, which I think we peak out a little bit higher. But, you know, bonds at 5 is an incredible, incredible return. So that's nice for right now, these days. So oil, Friday's going to tell a big story. If bonds are up here, and oil pops up, we'll see a shift in the market. We'll see perhaps some sector rotation, and boy, oh boy, you could see the market continue to dump. So keep your eye on bonds. I mean, you can trade it if you want to, but keep your eye on bonds and watch for how we keep hovering around that 4.9 up to 5 area there. As long as the consumer spending is elevated, all right, as long as consumers don't slow down, right, then bonds will stay up here. You got to have, inflation's got to come down, right? Those interest rates will keep moving, and consumers have to slow down. So this is why I give you this data. This is why we talk about it. I ain't just here talking for the health of me. This is really for the killer well, so I don't have to repeat my trade thesis and trade plan. But we want buyers, we want consumers to slow down. That will push bonds down and affect the market for a healthy market, and will allow us to kind of get after it and get the normal moves that we're getting during a normal trading season. Right now, we don't have a problem with these, high volume, high volatility moves. We love them. We love them. Those who are inexperienced, you get cooked. If you don't want to get cooked, I'm telling you, go watch the bonds. You'll thank me later. All right. So what did we talk about? We talked about the market events from last week and this week. We talked about the levels. We talked about our plan. We've got that. We talked about what people are saying about us, and I've given you free training. Here's the tools you need. Now, in the link attached to this video here, we've got our 90-day day trading journal. Go get it. It's a hard copy journal. Stop using the digital stuff so much. Go back to the basics. You'll thank me later. I've got the ebook coming out literally in about a week, How to Day Trade with a Full-Time Job. That is a specific setup that you need to learn how to trade with, right? You can got distractions, people coming up to you, you're missing moves, you're not focused. Get the book. There's setups in the book, video training paired with the book that you can also grab. You'll thank me later. And then we've got the indicators that we just discussed. With all of these three combined, and you're plugged into a continuous educational program and training program in the Wealth Wells, man, you are going to watch your skills go to the moon. I want to thank you guys for watching. I'll leave you with one thing. Remember this, you've got to get up every single morning with determination if you're going to go to bed with satisfaction. KD for the Wealth Wells, signing out.